Now, before I turn to the panel, just a brief reminder, if I may, of the context. As the first panel pointed out to us, traditional risks remain, albeit in a global financial landscape that has been substantially de-risked. However, there are new and evolving challenges to the stability of the global financial system, and of these emerging risks, cyber is receiving particular attention, as well it might. In November of last year, the World Economic Forum reported that in Europe, North America, and East Asia, cyber attacks are seen as the biggest threat to doing business. Now, I know that is quoted often, but I think it should be. It is quite an extraordinary thing. For regulators, supervisors, and financial services providers alike, the basic assumption is that cyber attacks will occur, and that firms must ensure that critical services can continue to be offered in such situations. Our discussion paper presses home these points comprehensively, and if you hadn't had the chance yet to read it through fully, can I recommend to you in particular the paper by Professor Kreis, who complements views from within the sector by arguing that further intervention will be needed to secure future resilience. Now, taking all of this background into account, I'd like to invite our panel members to begin by explaining for us what we're talking about when we talk about cyber. How much is the use of technology in financial services contributing to the creation of new risks? In what ways are these risks different from traditional risks, including threats from within the institution and outside the institution? And what could the consequences be if these risks are not properly addressed? And I thought I'd start by turning to the head of a major bank. Liès, over to you.
Thank you, Martin. Well, let me start maybe by saying that obviously first and foremost technology has been a huge opportunity for the financial services industry for a long time. I think what has driven probably development in the sector over the last decades has been an improvement in technology. To a largest extent, we all know that. What has changed, I would say, in the last couple of years is obviously we have become more technology driven than ever before as a result of more computing power that we see. We do a lot more via processes, automated processes within our organizations. And I would say the layers of risks are different than they probably were in the past. Now, why is that? Well, in the past, if you had a payment system that broke down, your payment system broke down, and then you had to fix it, and maybe you had an outage for 30 minutes or 10 minutes or whatever. That's bad. That can cause damage, but that's something which you can resolve. Now, what you have internal issues. You increase operational risks by virtue of increase of technology and digitization. But on top of that, the whole system is glued together via, I would say, a technology system that can be accessed not only from within, but also from the outside. And that's different. So our risks are not only our own endogenous inherent risks that we create because we do not have all of our processes 100% under control or something goes wrong, but also because somebody intentionally tries to attack. Now, when you look at as to who that could be, that's also multi-layered, as you would imagine. On the one hand, you have what is commonly referred to as phishing attacks. People try to access bank accounts of customers in order to get money out. But that's only one group, and that could be sophisticated hackers that do that not as a hobby but as a profession or as a criminal activity. That's one area. That's something which I must say today is probably an area where every day we have attacks in banks, and that's probably true for every major bank. Something which normally we can control relatively well with the respective systems and tools in place. But you also have something else. You have state actors, and they may want. Well, there are also again various layers. Some of them may want to do exactly the same, extract a lot of money, and we know there was an attack on the central bank of Bangladesh. It was where 100 million got stolen by what is now pretty certain. There was a state actor. It would have been $1 billion if they had not made a stupid typing mistake, and otherwise it was pretty clear that $1 billion would have gone out. That's one area where state actors maybe trying to fund their deficit in a sort of a slightly unusual way. That's one possibility. The other one is that you want to intentionally try to inflict damage, not upon necessarily one institution, but the system as a whole. And that's something which I would say would worry me the most. That's why we always say, when you ask bank chairman or CEO what the biggest risk is, they would say cybersecurity risk. That's probably that area where I think the risk is the biggest. If somebody successfully attacks the global financial system and the system breaks down, then, if the system is down for 24 hours, be it within an individual institution or the system as a whole, then you create a major global crisis. And that's something that everybody is aware of, and what everybody wants to tries to defend itself against it. And that's where I think where the focus on cyber has increased so much, because you want to be sure that, as a bank chairman, you don't want to be that bank, for starters, but you also want to be sure that the system as a whole is protected.
So it's not just a question of losing the tools can be perverted and used to cause us harm, and it's worse still than that, the system itself could be undermined by cyber. Michel, I wonder if you'd like to give us a sense from the perspective of the insurance industry about how these new risks look.
Thank you, Martin. First, I would like to say that I feel extremely honored to be probably the only insurer in this room. And I would like to thank the organizer of this meeting to invite also an insurance company to this meeting, to this conference. I don't want to repeat everything that Urs has said, but it's probably fair, even if you would probably expect from an insurer that he would underline the risk, underline 2 times the risk, because he has a solution to cover the risk, which in this case, and we'll come to that later, is probably not as clear as it may appear in for some other risk. But digitalization and cyber is a fantastic opportunity for the insurance industry. And it's probably, before all, an opportunity not only to intensify and to improve the process. I think the insurance industry can reinvent itself partly through these capabilities. It's an industry which has been living for a while of paying claims and cashing premium. I do believe that new technology will allow insurer and the insurance industry to know much better the risk that they are supposed to cover, and in a way, instead of only participating to the financial compensation of a claim, also improving the help that we can bring to risk management, be it to individuals or to corporation. And that's probably, but we will come to that later, also one of the opportunities in which the insurance industry can bring something to our clients in matters of cyber security. So probably more the risk management aspect than purely paying the claims. I fully agree on the fact that it's not only data breach, it's the attack on the system, which is the biggest risk. It's a risk which is at the level of large natural catastrophe, meaning that finding a solution only on the private sector would be probably an illusion. You need public-private partnership, taking into account the level of burden that can affect the industry. If really the attack is, it has the touch of a terrorist attack. So I do totally agree that we should not only concentrate on the effect that this kind of risk has on our own business, but it's mainly on the global system. And if I may say same thing in conclusion, as we are in Brussels, I do fear that we are losing quite a lot of time in this continent, in this fragmented approach to data knowledge and all these aspects. And if I want to summarize my view on what is happening, it seems that we are in a time in which China and USA are fighting for the leadership. We are still fighting for coordination. And I find it a little bit sad as a deep European.
Thanks very much indeed. I'm pretty sure we're going to come back onto that theme again later in the panel. But Jakub, I wonder if you can give us a an overview along similar lines from the perspective of the Commission.
So good morning. It's a great honor to be here. Thank you very much for the invitation. Let me share maybe this first general reflection. If you look into, we have a horizontal responsibility for cybersecurity. So we are undoubtedly at that stage of digital transformation, digital revolution, that basically nearly everything is connected and nearly everything is affected and vulnerable. But of course, it wasn't always the case. The technology, by the way, is still profoundly immature, and I was just a moment ago in a sort of place with EU Cybersecurity Agency. We had, again, an IT fault, and the only way to, of course, to basically make it work was just switch it off, and switch it on. I think the small thing illustrates the fact that we are still not fully grasping, all the dimensions of the technology. But what is, I think, very special about the financial sector, and that's what we see in a way from the Commission perspective, that the global finance generally was the early adopter, historically was an early adopter of new technologies, of information technologies, the first computers. And I think this is the way and the reason why actually we have these sectors actually testing, experimenting, and learning the hard lesson of cybersecurity. The advent of online banking, now it's almost 20 years ago, basically created a situation that for the first time, basically also the citizens have been actually using technology in a highly vulnerable area. By the way, obviously the move to online was the reason why actually, if you look across basically different categories of cybercrime, this is basically the main pole of attack. So what stems from that? I think there is a huge, in a way, responsibility and importance of the solutions adopted by the finance sector, of the regulatory measures that are being taken, because this is where basically we are learning hard lesson. And again, from our perspective, responsible for cybersecurity, we see how important it is to make sure that the lessons learned in one sector basically could be used in other contexts. Anyway, I will elaborate further on this, but I think, again, if I may conclude, it's a special, I would even say societal responsibility of this sector in a wider sense, given the fact that, the technology has been, so crucial in this context.
Thank you very much. Giuseppe.
Good morning, everybody, also from my side. Thank you very much for giving me the opportunity also to share my thoughts here. So on setting the scene, I think if we look at the technological developments, I think that it's fair to say that this is nothing new, in particular in the financial industry, right? So if we look back at what has happened over the past few decades, I would say, the financial business, and in particular the banking sector, has always been characterized by significant technological innovation. So, and then even the use of ATM, if I may, or electronic trading, the use of mainframe, this has always created a sort of cliff effect in the opportunities and risk, not to mention the use of internet and e-commerce. This, of course, does not mean that I'm trying to downplay the importance of cyber. So for sure now technology gives huge opportunities to the system, because all the business models now can be fully underpinned by very widespread use of technologies, and gives opportunities to both banks and customers that maybe we never experienced in the past. But of course, we are paid to express educated skepticism, right? So we always need to look at the risks. And here the issue is always, are we talking about a brand new risk, cyber, or is it just IT risk, which would be very maybe disappointing? I believe that there is always an option 3, that the fact that cyber is part of the IT risk, but goes beyond that. And I think that for me, the main features of cyber going beyond IT risk are indeed the malicious intent that was already mentioned, the significant interconnectedness across the system that was mentioned, and also as a consequence, the significant speed of propagation of any potential weaknesses in any part of the ecosystem. But hopefully, I would say we do not start from scratch. Also, to create a link with the previous panel when the complexity of regulation has always been raised, I think that we need to be very careful in not to reinvent the wheel. I think that we have some, let's say, guidelines, both within the banking and financial sector, and also beyond that, that can help at least, let's say, tackle some basic issues that we have seen. And we for sure will elaborate that further. But one thing is clear, again, also by drawing on the previous panel, that we are talking about a type of risk here that might not be necessarily linked to quantitative capital requirements. You saw the presentation before, and there was a last line which was linked to the corporate governance. Also, David mentioned that. I think that that's where we need to work much more on the qualitative part. Maybe it's much more difficult to draw harmonized lessons like calibration of capital requirements, because by definition the interaction with banks on governance must be case by case, because also we need to be neutral with respect to the business model that banks have chosen. But I'm sure that we will elaborate these points further during the panel.
Thanks very much, Giuseppe. And I thought there were some extremely important points in there. Speed of propagation, a vital difference. And you made the point that this is different, but it's not completely different. And I think that's often overlooked. Rob.
Thank you, Martin. Good morning. Yes. Just to echo the main points that we're hearing here, they certainly resonate with what I was seeing in my career in law enforcement, what I'm seeing now working with so many companies across the financial sector, and as a board member of the new Cyber Center, the World Economic Forum. There is this heightened concern in the industry as a whole, financial sector, and indeed others, that we are exposing ourselves to particular vulnerabilities that we haven't seen before. And when you hear industry leaders like Michel and us talking about the risk of catastrophic failure, I mean, that means something. And I think, therefore, across many sectors, but particularly in the financial sector, what is palpable now is that a sense of complacency in years gone by has been replaced with a sense of trepidation and a sense of a crying out need, I think, for industry and indeed regulators, therefore, to take it more seriously and to do something about it at the systemic level. That's certainly what I see. Of course, the mere fact that we are in this now much more interconnected digital ecosystem with longer, more complex supply chains than ever before, with long, complex third-party vendor chains as well. That in itself creates more points of vulnerability. Of course it does. It's certainly we're seeing in the major attacks, that's very often the mode of exploitation through third-party vendors to get into the target of choice, very often. The fact of this digital interconnectedness is seeing more and more examples of collateral damage, and that's an important point. When we've seen very significant cybersecurity cases in the last couple of years, which have hit global companies very, very badly. Almost wiped their networks when they were not at all the intended target, typically of an attack by a malicious state actor. So the sense that you can pick up a virus like a common cold in the school playground, the sense therefore that when you hear executives still in some industries saying, why would they come after me? I'm not a target. They don't have to come after you anymore. You can still get hit and you can still get wiped. So this vulnerability is much more, I think, large scale indeed. And for this industry, therefore, as we move ever more aggressively and rapidly towards the idea of digital banking with all that means, that of course is part of this transformation which is leading to this enhanced vulnerability. And I think for boards of those in the financial sector, and especially perhaps for the CIOs, for example, it creates a very difficult challenge around what the balance is, and even a conflict of interest to a certain extent. How rapid can your process of digitalization be whilst you have this potential higher exposure? And so it comes into, of course, this whole concept of how well you can risk manage this systemic new threat. Certainly in terms of the technology that is behind a lot of these threats, of course, Mobile banking in itself has just opened up another opportunity, of course, for cyber criminals to exploit us. And indeed, we've seen, of course, very specific enterprising forms of mobile malware, as indeed we have around now digital commerce and digital skimming, and new malware just in the last few months that we've been tracking. The fact that the availability of cryptocurrencies and Bitcoin itself has been a major new powerful tool to extort large amounts of money out of companies on an industrial scale. Without the availability of that new technology, that particular criminal problem, which is a major feature of cyber these days, would not exist in the same form. So of course technology is turned against us, and maybe later in the panel we'll talk about how technology can help us as well. As for the adversaries, I agree with those that we've heard already from Urs and others. I think the stock in trade certainly is illegal data acquisition and exploitation. Huge quantities of it sold on these darknet forums, still generating in bulk form, I think, the cyber criminal industry. And that's because still so many enterprises are not doing even the basics. So this repeat offender behavior, which is so easy for cyber criminal organizations, continues, and is such an easy way to make money, and that powers still the cyber criminal industry to a certain extent. But I agree that we are moving much more to a higher level threat, which is going after the bank transfer payment systems and themselves, very often associated with the highest grade capability out there from malicious state actors. And within that, Urs mentioned that the attack in Bangladesh. What is very interesting about that, apart from the high-end capability behind that attack, was how the actors also used cyber to enable large-scale fraud, and then the same actors laundered the proceeds of that fraud back through the system. So we have money laundering and fraud and cyber in the hands and the work of the same criminal network, crossing the lines of risk management that banks are currently running in separated ways. And it's asking new challenges of us about how integrated we are in our ability, even within an enterprise, but certainly across an industry, to deal with a more complex threat.
Thanks, Rob. And if I might say so, I think also insiders involved in that as well. Yet another dimension around cyber that we may come back to. And we do have this both at the prosaic, at the incremental level. We have problems that in a way we understand. If you invest more in them, you can reduce the size of the problem. And yet you have these high-end actors as well, as has been mentioned by several panel members. I don't think any of us in the room are in doubt about the seriousness of the issue, and that was a very helpful description of the range of issues that went with it. It does, though, lead on naturally enough to the question of whether we're prepared. And I'd like, if I could, to start with the regulatory authorities on the panel. And Giuseppe, I know you'll have a clear view of this. I noticed that you've published a paper on cyber resilience oversight expectations. I mean, with all of that in mind, I mean, what has been done already to address cyber risks, and what still needs to be done? I mean, what are the gaps, and what are the priorities to close these?
Thank you. Of course, you know that we can never say that banks are safe, right? In a sense, by design. So we always need to be a little bit skeptical. But the first point is that indeed we are not alone in this institutional task. Because we are also here in Brussels, but for example, the SSM, the supervisory part of the ECB, is not competent for cyber risk. You know, there is this NIST directive, and then there is an opportunity for member states to designate a national authority that is competent for cyber. But we are indeed a prudential authority, and we need to look from a prudential perspective the possible impact of IT and cyber. So this way also in very good company, because there are a lot of international fora that are looking at that. So what have we done so far, and what maybe we have found for the time being? So first, just to confirm that we have started before this cyber risk became so prominent. One of the very first horizontal thematic review that we have done was indeed the cyber risk in 2015. Because there is a lot already available in the banking sector with respect to the possible guidelines. So there is, not to mention things that have been published outside the banking sector, but if we look at the Basel Committee has published guidelines on IT risk, in 2011. They have also published the BCBS 239 on risk aggregation and reporting, which raises a lot of very interesting issues that are linked also to the cyber component. So we have conducted the first horizontal review in 2015 on cyber. We conducted another thematic review in 2017 on outsourcing, which is very much linked to what we said before also in terms of interconnectedness, because the value change here might be very long. You might have third party and fourth party and fifth party type of risk, because the value chain is very long, because if the request is to share information, to get synergies by putting data together, indeed you might also involve stakeholders that might have an incentive structure different from the banks or different from prudential perspective. Maybe IT security might be not as prominent as it might be in other parts of the value chain. And also we have learned that the more integrated we are, the more, let's say, diversified the information is in normal time, the higher the potential contagion risk might be during crisis. And again, not because we do not want that, but just because we need to be careful. So we have done this. We also have done something on IT risk in 2018. And then we have set up a cyber incident report in 2017. So we have looked, again, as I said, both at IT and a cyber part. On IT, we have also looked at some basic feature that maybe might not look so new, but I think that can play a big role. For example, the simplicity of IT infrastructure. Maybe the reliance on outsourcing and maybe possible concentration of outsourcing provider, which might increase, again, the speed of propagation, as I said. With cyber incident reporting, we have set our own reporting scheme, as many of you are aware, and I'm sure we can talk about possible duplication and fragmentation reporting schemes. But it's good to see that banks are reporting what's happening. Maybe we expected a higher number of reports, and then it is something I think that is very much linked to what was said also before about information sharing. For sure, we are not cyber authority, so we cannot provide any continuous real-time support from a prudential perspective. But indeed, we collect very informative reports that can also help us not only to look at idiosyncratic issues, but also market development. So this is indeed very important. So these are the type of things that we are seeing. Indeed, we ask banks to look at, for sure, at people. So even increasing the awareness is key. I must say that the feedback that I got is indeed the banks are indeed aware of the issues and also take action. The question is whether this is still enough. But for sure, the central role played by human people, by the people in terms of awareness, in terms of limitation of risk, and also in terms of applying mitigating rules is crucial. My last example is we were talking before about planning, about recovery plans. We see a greater reliance on planning for cyber risk, which is true. Plans, by definition, might be not very helpful, but planning is indeed very constructive and help both sides of the equation to increase the understanding of where the cyber risk is, but also on our side, maybe to engage and challenge some of the findings.
Thanks very much indeed. I think it's endemic to cyber panels. They always overrun badly. So panelists, forgive me, I'm going to keep pushing on, but I do want to ask Jakub if you would say something on this question. Are we prepared?
It's a great kind of glass half full, glass half empty question. So what is, if you look basically over the last few years, there have been quite a big efforts at the EU level to basically move forward with cybersecurity. In this context, I may refer to the NIS directive, basically the first comprehensive cybersecurity legislation in Europe, which is not necessarily something very sophisticated, but sets the basics, which is basically requirement on member states to have minimum capabilities. And that specific point, I think, makes a hell of a lot of a difference, because the starting point, and that was basically the main reason for us to act, was that there was an extremely diverse level of preparation and resilience across member states. with some member states being, let's say, global leaders in terms of taking cybersecurity seriously, and some others, really, really seriously lagging behind. So now we have basic elements in place. Now, what is indeed, and this is part of this, let's say, sectoral approach of the NIS directive, so that we basically identified the, in a way, critical sectors of economy where we really need to move first. There is always, I wrote in the description of your panel, where to regulate, how not to make it an obstacle towards innovation. So in that sense, it's a modest step. We are not creating cybersecurity, let's say, legal obligations across the whole economy. Finance sector, for us, I mean, it's no brainer. It's part of it, but I mean, Giuseppe from European Central Bank knows it very well. We have a very kind of a complex situation because financial sector, unlike traditional critical sectors like energy or transport, is much more integrated at European level, and that indeed creates quite some challenges about which rules eventually will apply. And I think the whole process of the transposition of NIS directive will allow us to find, let's say, the right answers. What we basically see, and that indeed, I mean, if you compare this sector to these other classical sectors, it is certainly more prepared, more is at stake, and there is more understanding, more investment. What I realize more and more is that when we talk about cyber awareness of citizens, it is often actually your bank that is basically the first sort of institution, the first interlocutor who tells you how to behave, that not necessarily, share the passwords with everyone, and not necessarily to click on everything that you receive. So I think these are extremely important elements, I would say, of the whole ecosystem. Last but not least is the question of reporting and information sharing. I have a feeling that again, perhaps with the exception of financial sector, we are still very early in that process. There is still very strong resistance to basically disclose the problems that happen to you. And in that sense, the fact that basically reporting of cyber incidents is integrated, especially for this kind of most important banks, into overall reporting, it actually is going to be helpful. But that will not be sufficient. That's why also we see a huge importance of voluntary information sharing systems, and financialized academy is perhaps now the only one that actually at European level can start demonstrating some practical effects. And we would like to encourage more of this also across different sectors.
Jakub, don't put the microphone down, because I want to get the others in on this, and also on the question of the level at which further efforts should be made. Should this be at the European and the regional level? Should this be at the global level? Can you say something about the extent to which you see scope for action at the global level compared with the European?
Yeah, again, of course, being EU official, I only, it's like with having a hammer, I see only nails. So my kind of natural way would be say, okay, this is where we, at EU level, obviously, especially when you speak about financial sector, this is where we can have an effective response. Before I move to global, let's say, dimension, the real challenge that we have now in cybersecurity is the fact that, and that was very much visible through the process of the negotiations of the NIS directive, that in spite of every minister would easily say cyber knows no borders, but when it comes to practical discussion, the kind of automatic reaction, no, this is a national security issue. This is a national security issue, and that's why if you look to this first important legislative step of the Union, when it comes to basically regulating what type of security measures should be taken by the companies, which companies should be covered by the legal obligations, what exactly needs to be reported and how, today we are at a stage that each member state is deciding those things. What we have at EU level is just the general, let's say, non-prescriptive risk management approach, state-of-the-art measures that needs to be taken by the companies, but then in practice it is being decided at national level. Again, finance is a special case because, as I have said, the degree of integration is higher, which for us is, by the way, also a very powerful and potentially useful lesson that you cannot actually deal with those things effectively at a national level. I just met people from a railway equipment industry who tell me, we are pretty much worried, we sell equipment to the trains that go between different countries. What if, again, technical, let's say security measures spelled out in national legislation would differ? So these are the things that we are going to grapple with, but again, I would be quite optimistic because there is a lot of understanding that we need to move forward. Okay. Now, in terms of global solutions, I think there is a lot of, I would say, very useful dialogue at the international level. But again, from, let's say, our side, and here I wouldn't speak about finance because, I mean, we are not dealing with, let's say, global cooperation in terms of supervision at a global level. But if I look at the other sectors, we basically lack at this moment any, let's say, realistic means. It's a lot about dialogue, about exchange of best practices, but I think we are far from having a more, let's say, uniform approach at a global level.
I think, Ursa, I hope I'm not misquoting you, but I think I've heard you talk about globally consistent regulation, which is perhaps subtly different to global regulation. But, I mean, how do you see this evolving at the regional and the global level?
Well, let me say a couple of things first about regulation. I think the expectation, we have to set the expectations right. There are certain things which we can do and where regulation makes sense in that space, in my opinion. You have to get the basics right. I think what you refer to, Giuseppe, about the corporate governance aspect, I think if I talk about our own industry, for instance, you start at the board level, you want to make sure that members of the board understand what the issue is, what the basic issues is, and what you can do to improve the situation of your own company. That's already quite a lot. But you have to start there. And I think this is an area where you can set minimal standards, expectation levels, regulators do that, supervisors do that. You can also, on the technical level, probably have some basic regulation, but I think it would be unrealistic to assume that you can have a comprehensive set of global regulations that, put an end to a cyber security risk, because by the time you do try to do that, if you ever were to get there, there would be the next phase of the cyber evolution that will not do that. So that's not a starting point. So what I would think we should do, we have to get the basics right. We should talk about people, we should talk about processes, we can talk about also certain technology questions. In a company, you want to discuss internally how you deal with the insider problem, which, when you analyze these cases, very often at the origin of it is a malicious insider that has created the issue, not always, but to a very large extent. And then the other area where I think, and now I come to your question, Martin, where I think you can regulate is the question, how should the interaction be between the private sector and the public sector? Private-public or public-private partnerships is probably the key thing to do in this space, be it in order to assess the risk level, being also to check whether the awareness and the preparedness for an incident is here. And that is something which you can do. And that I would assume you can do on an EU-wide basis in the EU. Probably in Switzerland you would do it on a national level, and so would you in the UK. I mean, my practical experience has been with the UK, because we also have a bank or two in the UK. And that was a very good experience, I think, for all of us to realize what the issues could be and to learn from that going forward. I think those are areas that you can touch. A comprehensive set of global rules on cybersecurity above minimal standards, I think, is unrealistic to achieve.
I've heard the phrase before, although perhaps not much recently, about a cyber Geneva Convention, and I'm afraid for any of you who know the history of that, we're much more 1929 now than we are 1949. And unfortunately, we know what happened between those two iterations. I'd like, if I may, to move us on, and I wanted to talk about, the it seems inevitability of damage caused by cyber. I wanted to ask you, Michel, our next question about the sort of conditions that are needed to ensure a competitive cyber market. I mean, to what extent can cyber risk even be insured by insurance companies? How do you measure cyber?
I think one of the key issues, by the way, is probably to guarantee an effective cyber insurance market more than a competitive one. For the competitiveness, we'll take care, don't worry. But it needs to be effective and covers really what needs to be covered. I think probably the first dimension, and that will be a bridge from the previous question to the next one, is as long as potential clients, and there definitively it goes much beyond purely the financial service industry, do not totally capture that cyber is far from being only an IT risk, and it's definitively a governance risk in each corporation. You need to understand that the human factor is probably one of the key factor of fragility in matters of cyber risk. So that's something which is extremely important, and in the cyber cover which are distributed for the time being, it started always with the due diligence of these aspects of the potential clients. And if that is not covered, if you're still in a corporation in which you get the impression that everything in the end of an IT department and it can solve everything technologically, definitively there is no solution, if I may say. I think the key elements, well, there are various. You need to be able to quantify cyber risk, but what you quantify today is something different tomorrow. So it's a massive challenge, but without any kind of quantification of the risk, it's difficult to speak about insurance. You know, it remembers a little bit the medical malpractice insurance, in which you need to cover a doctor knowing that the majority of the case will never be known to you, because by definition, a doctor doesn't want to report on a medical malpractice. And as we are still in an environment in which, let's be fair, the victim is punished because we do not find the murderer, the reporting dimension is extremely important. So we need to definitively find a way of information sharing increase, but the fragmentation there is the key issue that I did mention at the beginning. We need desperately a standardized taxonomy. Let's call the same thing the same way. We've probably invented in the world several ways of expressing the same thing, and I think in Europe, maybe not 27, but at least 20 ways of expressing the same thing, and that's definitely not helping addressing the risk. We need probably the regulators helping us to raising standards among businesses, and again, there I'm speaking probably much more of other sector than purely the financial sector. There are probably some exceptions, but I would say in the financial sector there is an enormous amount of raised standards in the protection of the data. But we need a good understanding by all the players that needs also to be improved. And we need, that's what I said at the beginning, a very good understanding with the public sector of the accumulation risk. There is an enormous accumulation risk which in that respect cannot be insured without the support of the public sector. And let's not forget the last point, in which you have, through the Internet of Things, which is evolving at an extreme speed, you have this kind of silent covers. And I think it's important, it has been said by somebody, that there is a conflict of interest in the fact that you want to take technology as a kind of new opportunity to approach your client better, to understand your client better. But behind any new technology, there is a risk. And if you fall in love with innovation, you sometimes have a tendency to forget what is the risk behind innovation. And I would say in any kind of innovation meeting in a company, the chief risk officer should be invited, and invited to speak also.
Thank you very much. And if I can just echo a point you made in the middle of that about the desperate need for an agreed taxonomy. I heartily echo that. But Rob, I mean, this must be a subject between you and your clients, the whole question of cyber insurance.
Well, it is. I think the insurance industry has some particular vulnerabilities because of the quantity and sensitivity of so much personal data that they carry, about the extended point of vulnerability and outreach that they have across a very large customer community. So they're carrying a cyber risk, of course, in some cases of hundreds, if not thousands, of policyholders as well. And at the heart of this is this sense, as Michel was saying, that it's very difficult to quantify the risk. And even protecting the essential interests of the insurance providers is hard enough, even before you think about commercializing the advantage of that in terms of cyber risk insurance, which I think is so difficult to underpin with the right kind of risk modeling. So I think there's some nervousness in the community about how they might jump into that. But at the same time, on the positive side, maybe a sense that through the insurance sector, we can use it as an instrument by which to improve common standards, that we can set certain benchmarks which are attached to maybe some insurance conditions, which in themselves will drive a different behavior, not just in the financial sector, of course, but far and wide. And I think that's the space that we should be trying to target here.
Thank you very much. I wonder if either of colleagues on the more regulatory side would like to...
Maybe I would like to complement on, again, on information sharing. So if we look at our experience of incident reporting, I think it's fair to say that there are possible hurdles there. So the first dimension is indeed between the reporting bank and supervisor. Okay, we are looking at this from a supervisor perspective. You have heard that there are national security issues. That's why the ECB is not responsible for cyber risk. But we can play our role, as I said. So the first line of communication is between banks and the supervisor. And this is really something that might raise some issues on the banking side. The second dimension is information sharing within the industry. And the third one is indeed the possible role of the public sector in promoting the information sharing within the industry. So, and then if we follow the decision tree, so already tackling these three dimensions might imply a lot of discussion and assessment of possible unintended implication. But if we follow in the decision tree, and then the issue is, if I may, also what Alex Weber said before, also cross-border information sharing potentially. So, are we truly able to share information? So there are some regulations that are outside also the financial sector, also because we are talking about confidential information, that might not allow a full information sharing. Second, also from the opportunity perspective, is the industry fully willing to share information on their own weaknesses? So, and again, I do not have the answer. But I think that this is the way I think that we should also start the engagement on both sides. So I think that these for sure are issues worth considering. Personally, I do not have the answer, but I think that we should also, in terms of managing expectation, we need to be fair and transparent to assess both sides of the coins. Because indeed the information sharing is already difficult now across supervisory community because of some confidentiality or some discussion on equivalence of some regulatory framework. So not to say that I do not support that, but I think it would be absolutely crucial to also to map the possible impediments like it was said before.
I agree with you 100%. I think the issue of information sharing can be resolved if everybody is well intended to do it. I mean, we have done that in the past. But before cyber, mutual assistance in criminal matters, information sharing, that's something which is not news to us, but obviously it has a heightened scrutiny now. You have to balance different aspects of it, data protection rights, etc., and so forth, but I think it can be done. And if you were to look at one industry where, in fact, also the sharing of weaknesses and mistakes has ultimately led to a much more resilient industry, and a better industry is the airline industry, where basically everything is being reported, and they are at the stage now where basically people are not getting punished for reporting, actually, if at all, of what they did, or they're getting punished for not reporting, if at all. And that has really increased the level of security in the airline industry. I think cyber could be an area where you do a similar thing in terms of approach. in my opinion.
Just first, if I may, just to refer to your example, aviation industry indeed is a model with this kind of concept that every slightest incident is basically needs to be publicly disclosed. I even recall that as part of, let's say, brainstorming, we have been even playing with this idea, I mean, theoretically. But the problem, of course, with cyber is that the number of incidents, you know, is basically hundreds of thousands or millions. So that is actually, again, shows the difficulty. The same, which is very also much relevant to the insurance. I mean, if you look more broadly, we definitely need insurance. And what we, but how far it will take us basically to reach that level of, I think we will never reach that level of certainty. How it is, you know, as when you price the risk of a damage related to a fire, yes? I mean, assessing the risks or the level of the damage that might be created by cyber incidents is infinitely more difficult because, I mean, let's just take an example where personal data was exfiltrated, how to price it, because a lot would depend, again, how this exfiltrated data, whether it was a personal data or whether it was a sensitive commercial data, how it was further used. In any case, there is a major homework to be done. I recently, talking to the representative of the insurance industry, understood that especially with the UK leaving the EU, the share of EU in existing and still not so developed cyber insurance market would basically drop to minuscule numbers. From our side, we feel that there is indeed something that we can do from a regulatory perspective, that is to basically contribute with the data. We will have, for the first time, a data generated by the incidents reported under NIS directive. I would estimate that would be data for 2019, which should be available in 2020. We have even an attempt to have there is a taxonomy, but taxonomy is not part of regulation itself. It's something developed in a collaborative way within the cooperation group that brings together NIS competent cybersecurity authorities, and this activity is held by ENISA. But we will see what will be reported. But again, if you go to the essence of what's being reported, it is again reported to the national regulator. How to make this data available? We will have some aggregated data, which anyway would be better than nothing, but how to get more out of it. And that is, again, my invitation also to the insurance industry to basically engage in serious conversations with national authorities, because without, I would say, more readiness to disclose the data, again, this process of again, developing a cyber insurance market would be very slow. And we see also a sort of a virtuous cycle between different, let's say, elements of, I would say, policy toolbox or a puzzle. So we have a regulation, the regulation where where companies have to take security measures will make them more keen to spend money, perhaps to spend money for cyber insurance, perhaps to also acquire products and services that would be certified. Again, this is a recent, let's say, achievement of all of us, the political agreement on Cybersecurity Act, which will pave the way for cybersecurity certification of ICT products and services. So all of these pieces of the puzzle have to work together if we are really going to build a serious cyber resilience.
Jakub, thank you very much indeed. Conscious that lunch and closing remarks are looming, I'm just going to turn to our final question and ask Rob to say a few words about technology. It might seem a bit odd to come to technology at the end of this, but this isn't a technical panel, but there is a question about the extent to which technology can come to our aid in dealing with the problems of cyber and the related issues that we've been discussing.
Yeah, certainly it can, of course, and we're seeing in everyday practices in the financial sector and other industries how, very enterprising technology is helping with the orchestration, automation of high-volume repeatable tasks, for example, around web and email filtering, and certainly has an impact on that, how at the endpoint security level, how we're seeing AI solutions beginning to take hold in identifying anomalous behaviors, for example. And that's very good as well. How there is very enterprising technology around data analytics, that when we fuse the data, we can see that. And there seems to be a theme of this panel, Martin, that we keep coming back to information sharing. I have a little bit of experience of that at Europol. So the point I would make here is that despite the availability of the technology, which at Europol we had some profit in utilizing, to connect 1,000 law enforcement agencies, as Jakub knows, and transform our view of understanding terrorism, cyber, and everything else. It is not yet being done in the financial sector. There is a bit of hot air and warm words around how much it is being done. Believe me, it's not. There are no real solutions yet, or real practical examples of substantive information sharing, certainly not in terms of public-private partnership. And where technology is available, not being used, that's the obvious example. My second general point is that technology helps, but is not actually the most important, certainly not on its own. It cannot solve the problem. We know that. And indeed, some companies I see are still sort of slightly taken in by the false hope of what technology can be the answer, to quickly purchase the shiniest new solution on the market, even before it's fully tested, and before, very often, the organization is ready to absorb it. And so very often the human implementation of these great solutions is flawed. And so it sort of illustrates the cliche that we always hear, that it's not tech only, it's also about people and processes, and it's about engineering all three, I think, that perhaps is the most important here. And to echo the simple advice of, say, the National Cybersecurity Centre in the United Kingdom towards all companies, yes, go for strong security solutions, but keep them simple in design. Go for a solution with a high emphasis on high utility, so that everyone in the organization can understand them in a simple way and operate in a simple way to ensure common standards. So I think it's as always, Martin, it's about how you can orchestrate a technology-people combination to the best effect.
Thanks very much. Giuseppe, a quick word. And then
I couldn't agree more on both points. First, technology really is neither good or bad. It very much depends on what it is used for, and it can surely help. On your second point, that technology cannot address all issues. What is crucial for me is that it should be integrated in the risk management and the governance of the banks, which goes back to what we discussed before. Not only the CRO, but the board should be involved. The three lines of defense, like also the crisis has shown, should be involved. They should be able to steer the use of technology and to monitor the risk. So I think that this is really what is important, because the technology should be integrated in a normal governance in order to allow for detecting and monitoring risks.
thanks very much indeed. Well, I've got a clock in front of me, I'm afraid. So, Urs, I want to turn to you for a few brief finishing thoughts, if you have any. I feel we rather did the question of regulation and injustice. I think we could have said more about coherence of regulation than perhaps we did. But is there anything you'd like to finish us off with, any wise words?
Well, I think Rob and Giuseppe just summed it up quite nicely.
Very nicely. I don't think there's much more to add here. I think in the end, I would say that if there's one underlying message I always try to convey also within my own organization is on this topic, try to get the basics right. Then you have achieved certainly 80% of what you can quickly achieve, and then work on all the rest and try to upgrade your knowledge base over time. And that you have to do more. You have to do more at all levels. That includes the board. We will do cyber simulations at the executive board level. We do cyber simulations at the supervisory board level. And I think over time, then you get more used to it, and I think you have a much better chance to have a resilient organization. And on the wider level, I think what I said before, I think this is really a topic where public-private partnerships are absolutely key and essential, where we have all a vital interest in working together in order to keep the system afloat.
Urs, thank you very much indeed. And indeed, thank you to all of our panelists. I'm going to ask Mr. Gavile if he's nearby to prepare himself to come onto the stage, but for the moment I just want to thank all of you. Very much appreciated.